Morning Call. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. And guys, good morning. Before I start, I just want to say to our viewers that our heart goes out to the extremely tragic incident, the train accident which happened on Friday evening, and of course rescue operations underway all through this weekend. Our condolences to those, who've lost their lives, the families, and of course hoping that, the wounded are coming back and recovering at the earliest. Yes.
Absolutely, and there's so many unanswered questions as to why this incident has happened.
Yeah.
But a railway report that was released last year indicated that 70% of the accidents that take place are due to derailments. And there's no real answer to this. Of course, a probe is underway, but as you said, condolences to the family, to all the victims. It's extremely tragic. I think we haven't seen this kind of an accident happen in a really, really long time, and hopefully something like this will never be repeated again.
Well, indeed, heartbreaking scenes coming out of there, but prayers and support. The nation is with all those families. It's heartbreaking visuals over the last couple of days.
Absolutely. Well, guys, let's kick this off in terms of how things are looking as far as markets are concerned. So, it's a fresh, in a way, it's a fresh kind of slate, and I'll tell you why. Here in India, markets have kind of failed to conclusively clear the zone, this 18,500 to 18,600 kind of zone. We left off at about 18,534. For about 2 or 3 days now, every time we get to the midpoint between 18,500, 18,600, the market kind of sells off, pulls back. We end higher, broader markets are doing very well. The small cap index, for example, last week was up 3%, while the Nifty was absolutely flat. So there's no problem as such, but the index, if you want to take a look at, has been failing to clear this in a very conclusive zone. We've got very positive cues out of the US. If that makes a big difference, that is. The S&P is up 1.5%, but for me, the bigger of the indices to track is the Russell 2000. The NASDAQ is a smaller index in terms of just the number of stocks. S&P is broader. Russell 2000 is the broadest. And that index moving up 3.5%. And there are, if you just look at the charts, it looks like the Russell is breaking out. That is very good news. I put out a piece early last week, that the rally in the US has been the narrowest almost ever, at least since the 90s. Which is that just 6 or 7 stocks have been contributing to the bulk of the gains, but looks like it perhaps could be broadening out. So that's point number 2. US jobs data was extremely strong for the 14th straight months. The jobs data has beaten expectations. The unemployment rate also inched up, and that is the reason why markets were confused about what to do to Fed pricing. So the Fed pricing for June is unmoved. It's still kind of split between whether to hike or to skip, depending on who you ask. There was no conclusive push to that, despite the fact that the headline jobs data was very, very strong. Oil prices, there was an OPEC announcement, OPEC Plus announcement, Saudi Arabia, and a surprise act has decided to curtail output again. 2% move, but over the last 3 days, oil prices are up 7%, and this is important to track. Let's get back to the market here, right? So, as I said, we've kind of failed to conclusively take out this 18,500, 18,600 zone. But it is also true that on the downside, supports have been respected. I've been putting out this 18,420 number for the last at least 1.5 weeks or so, and that remains unbroken. That basically was the high in the last swing. And as long as that holds, I think, the upside hope remains intact. There is a upward sloping channel. The upper end of that range is now moved up to about 18,840. It's some distance away from where we left, so I don't want to bring that into play this morning. But the fact is, SGX is indicating a strong start, and it'll be interesting to see if we are able to hold those gains by a close. Bank Nifty has tested and held the 20-day moving average for 2 days in a row. So on the Bank Nifty, just to take Thursday, of course, we hit and then we bounced. But on Friday, the 20-day moving average is, as of Thursday's close, was 43,815. And the low was 43,813. So you basically had a touch and then you had it supported. The 20-day becomes the support, And then the Thursday's low, last Thursday's low of 43,706 will be the next support to watch out for. And on the upside, a break above 44,500, 44,499 to be precise, will confirm further upsides. I mean, the impulse is to try and buy the dip. The impulse has been to kind of look at single stocks, because that is where a lot of the action has been, even as the Nifty or the Bank Nifty has been seeing some middling kind of price action. Sonia.
Oh, absolutely. And, the big question that we're asking, right, this morning, given what the SGX is suggesting, is that does the Nifty have enough ammunition to move out of the trading range that we've seen in the last many days? And that's what we were discussing last week on Editors Roundtable as well, as to how the market is just fixated with, with this range of 18,300 to 18,600. So that's the big question I'm asking. Strong global cues as well as the impending RBI policy, can it cause the Nifty to break out of the range? Now, the intraday high, which you just saw on your screen last week, was 18,662. So that is the big hurdle on the upside. Let's see if that gets taken out today. Of course, the start is in the green, but let's see whether we can build on to that. The Dow had a strong rally. The jobs report was hot. The non-farm payroll data in May grew 339,000. And, just to mention, this is the 29th straight month of a positive jobs report. So let's see what the US Fed does, because the next meeting will be on the 13th and 14th of June. We'll keep our eyes out on that. So two events to watch out for in the next fortnight. One, of course, this week you have the RBI policy. So that comes out on the 8th of June. There is a pause that's likely in this monetary policy, largely because of the lower inflation print in April, as well as the strong GDP data. And that's a similar case for the US Fed as well, likely pause that would take place on the 13th and 14th of June. But for our own markets, domestic institutions continue to buy in the cash market. So that's, one thing that the flows are coming in. So DI has bought about 600 crores, second straight day of buying. FI sold a tad bit, but nothing alarming, just about 660 crores or so. So that's the big question, right? This 18,600 mark, is this the week when we break out of that range? For now, the SGX Nifty is indicating that a start will be well in the green, but whether we hold on to that, time will tell.
Well, bulls are calling out for those all-time highs, Sonia, and it appears the global cues are positive, as you all mentioned, but it appears that the domestic cues or the domestic factors will have to take us to those all-time highs. Remember, we have the RBI meet later this week, which is the crucial trigger. And also in terms of flows, the FIs have taken a couple of days where they've stepped back a little bit, and the DIs need to take control. And if we just take a look at in Friday's trading session, the institutions, they were net sellers, to the tune of close to only around 77 crores odd. But institutional flows is something that's helped the index move higher. So you like to see more of the same. Now, the net sell number compares with the positive number of more than 1,200 crores. So in the last 11 sessions odd, we have been seeing good amount of institutional flows, which, petered off a little bit in Friday's trading session. What are the FIs doing in the FNO market? Well, they added more longs. The short positioning, though, is at around 52%. And on the writing side, both the writing calls as well as puts. I'm looking at the options data and just highlighting two strikes. One is the 18,600 call, because the open interest out there is more than a crore shares. The premium over there is around 70 rupees. And on the downside, 18,500 put. That as well has more than a crore shares in terms of open interest, and the premium there is around 50 rupees. So you plug both those two numbers in, and you'll get your rough range. The recent high on the Nifty is around that 18,660. So on the upside, the bears are playing for 18,670 odd level, holding out. That's a bit of a resistance zone. On the downside, 18,450, well, buying closer to that level will be beneficial. On the Nifty Bank, the highest open interest is at around 44,000 call. The premium out there is around 300 rupees approximately, and the recent high is around that 44,400, 44,500 odd. So that becomes a bit of a resistance zone. The Nifty Bank needs to make its way back towards those highs that we saw last week, and then maybe, in fact, the Nifty can start moving to those all-time highs. I think SGX Nifty is suggesting an 80-90 point gap up. You may want to take some money off the table at the start today, and you may want to buy the dip. And as I said earlier, that 18,450 odd, well, that is the near-term support for the Nifty. So let's see how this goes. But I think taking some money off the table yet again will be prudent.
Well, let's quickly tell you what is lined up here over the next 30 minutes or so. We get you updates from markets across the globe. Dean Kim will be joining in to discuss that setup. Our research team will get you the top 10 stocks of the day in just a bit. And of course, the guest on the show, the first guest on the show to discuss markets is Prakash Diwan, and he'll be with us at 8:30 this morning.
Okay, I just noticed that the SGX Nifty is almost 100 points in the green now. So it looks like it's going to be a big bang opening, 95 points up on the SGX Nifty. Brace yourselves for a positive opening this morning. But on the equity side, we have some good cues coming in. Sanjay Mukim of JP Morgan says that they have analyzed 3 factors, namely earnings revisions, valuations and price momentum trends for 80 customized industry clusters to identify potential mean reversion candidates in India. Sectors that appear attractive are PSU banks, power transmission, micro mortgage finance, media and two-wheelers. They have also updated their model portfolio to add weight to SBI, Bank of Baroda, Power Grid, Bandhan Bank and Hero MotoCorp.
Okay, we have another opinion from CLSA's Vikas Jain. They've cut their F5 24-25 expected Nifty EPS by between 2 and 3%, led by IT, cement and capital goods. Consensus also reduced Nifty's EPS by 1%, mainly driven by IT, metals and banks. CLSA's 24-25 expected Nifty EPS is now 3 to 6% below consensus. The key risk to further earnings cuts is the risk of lower rainfall due to El Nino, rising inflation and slowing macro growth.
All right, let's also get you some money market views. And let's, with the way the dollar has moved, this is important on the rupee front. B. Prasanna of ICICI Bank says the dollar is now finding support from its persistently strong jobs report and the other economic data, while the Fed commentary indicates a likely skip in rate hikes is dampening the dollar's strength to some extent. He adds currency outlook seems to be negative for the Chinese yuan and the Asian pac. The rupee appreciated, supported by equity inflows, and is likely to remain range-bound between 82.10 to 82.80 while outperforming its peers.
Well, on bonds, B. Prasanna of ICICI Bank says resolution on debt ceiling and possibility of a skip in rate hikes in June has led to lower bond yields. However, yet another set of strong jobs data has kept alive the possibility of at least one more hike later, resulting in yields climbing higher. Back home, bonds remained well bid ahead of this week's MPC on expectations of continued pause. Prasanna adds that RBI's decision on stance will be keenly watched. He expects bond yields to remain ranged, with the 10-year benchmark yield trading between 6.9 to 7.05 range. Okay, well, Dean Kim is now joining us. He's head of global research product at William O'Neill. He's with us to take some questions. Dean, good to have you with us here. Thanks very much for your time. The rally in broader markets, Dean, here in India has been absolutely fantastic, even as the Nifty is yet to make all-time highs. Out there in the US as well on Friday, after a long time, we got indications that broader markets there are participating. And it's not just the 6 or 7 stocks which are doing, almost 100% of the heavy lifting. The Russell was up 3.5%. What's your sense? Is the rally broadening out there, which makes it a little more sustainable?
Yeah, I mean, Friday was a very interesting day. So despite the hotter than expected non-farm payroll numbers, the US markets made year-to-date highs and trading above all key moving averages. And particularly if you look at the small caps, they're breaking above the 200-day moving average with good volume on Friday. So that was great to see. And this is the first time that small caps, as represented by the Russell 2000, close above the 200-day moving average since early March of this year. So, we think if the trend continues and if the Russell 2000 can hold support at that 200-day moving average, trade sideways, and then move on from there, that would be a great sign. But I would say we're still quite not out of the danger zone, as we do not want to see the reversal of the small caps. And as well, as we continue to see only 31% of the New York Stock Exchange stocks trading above the 150-day moving average. So only time will tell, but so far the action looks fairly constructive. And, if the small caps can broaden out, I think that would be a great sign for the market.
Okay, the action looks fairly constructive. I get that would be your view, Dean, for the Indian markets as well, because we've had a smooth run, but for some reason we just failed to get out of that 18,600 resistance zone. Do you think this could be the week when the Nifty takes that out? And what do you think the leaders of the Indian market could be, or who could be the leaders now?
Yeah, I mean, I look at the rest of Asia, and it's great to see the AAXJ and the EEM ETFs. They're both have turned around and reclaimed their 200-day moving averages, and maybe on their way to form the right side of the base. So India, Japan, Korea, Taiwan are in confirmed uptrend. Of course, China and Hong Kong needs a bit of time. They're still in downtrend, but rest of Asian markets are in rally attempt. So I'm looking at AAXJ, for instance, very closely. Like EEM just overtook the 100-day moving average. So that's great. If it can continue to behave in that manner, we're on our way to form the right side of the base, in which case the rest of Asian markets is going to come up along with it. So I'm not particularly concerned about India, as currently if I look at sensex, we're at around 62,500. Next support is the rising 10-day moving average. That's less than 1% away. And right below that is the 21-day moving average. And that's about 1% away. So I think even if the Indian market kind of pulls back and you see a bounce off of those moving averages, I would still consider that to be healthy action. And so in terms of leadership in the Indian market, now we're starting to see some consumer cyclical names come up, particularly automakers like Maruti Suzuki, Eicher Motor, EIH, and so on. EIH is leisure, but then you have names like Marico, which I haven't seen in a while, but that one is setting up. A lot of the financial names are coming up, as well as healthcare names. So, the Indian market is very broad, so much broader than the U.S. So that's great to see. So I would say even if we see a bit of a pullback, as long as you see a bounce off the moving average, that would be very constructive.
All right. Hi, Dean. Morning. Any view on crude? Overnight we have some supply cuts that's come about. And from an India perspective, we are quite happy to see crude come down from around that $90, $95 odd to around $75 per barrel. Still not alarming, but it's moved up close to 3% overnight. Any view out there?
Yeah, if we look at street crude prices, right now we're sitting around $71.70 or thereabouts. We see next support level at around $69.50. Resistance at 75. So I think we need to watch the resistance level closely, especially on the back of OPEC just announcing that they're going to cut back production starting in July. So that 75 is is around the 50-day moving average. So that's about 4% higher. So that's going to be a crucial test there. So we'll see what happens. But I think we may see a little bit of a upward pressure on crude based on this news, but as if oil can face resistance at around that 50-day moving average, then I would say we're still well positioned for a global rally.
We're still well positioned for a global rally. Got that. Dean, thanks a lot for joining in. Appreciate your thoughts, and thanks a lot for speaking to CNBC-TV18. Let's slip into a quick break. On the other side of the break, our list of top 10 stocks coming up with our entire research team. Stay tuned.
CNG is good, but to get something, you have to give up something. OMG! It's CNG! Big boot, big appeal, big reaction. OMG! It's the Altroz iCNG.
अभी और कितने चक्कर लगाने पड़ेंगे सर जी?
आप इतनी सी बात क्यों नहीं समझते सर जी? आप हमारा ध्यान रखो, हम आपका ध्यान रखेंगे। 9501 200 200 ये
एंटी करप्शन एक्शन लाइन।
मैडम जी आप बेकार में परेशान हो रहे हो। मैं कराता हूँ ना 2 दिन में आपका काम। आप तो बस चढ़ा देना, घर बैठे आ जाएगा आपका लाइसेंस। आपको ड्राइविंग टेस्ट की भी जरूरत नहीं पड़ेगी।
पक्का?
पक्का जी पक्का।
तो आपने एक नंबर लिखिए, जब बन जाएगा तो उस पे कॉल करिएगा। 9501 200 200 200 2। एंटी करप्शन एक्शन लाइन।
अगर आपसे भी कोई रिश्वत मांगे तो कॉल करें 9501200200। एंटी करप्शन एक्शन लाइन से पिछले 1 साल में अब तक 300 से ज्यादा भ्रष्टाचारी गिरफ्तार हो चुके हैं। पंजाब में रिश्वत लेने वालों की अब खैर नहीं।
पंजाब के लोगों को ये संदेश देना चाहता हूँ, पंजाब को भ्रष्टाचार मुक्त बनाना हमारा वादा ही नहीं, गारंटी है।
इंश्योरेंस कोई आरओआई नहीं है। एमएफ ईयर चेक कर, हाई होगा। क्या है?
आप बीपी चेक कीजिए, हाई होगा। हाई बीपी से सीकेडी हो सकता है और उसके ट्रीटमेंट से आपका टोटल लाइफ सेविंग्स खत्म। एसएचआई ले लो।
एसएचआई
स्टार हेल्थ इंश्योरेंस। अपनी सेविंग्स को बचाइए स्टार हेल्थ इंश्योरेंस के साथ, द हेल्थ इंश्योरेंस स्पेशलिस्ट।
Good morning. Welcome back to Bazaar Morning Call. Hope you're having, a swell morning so far. The SGX Nifty is indicating that the bulls will definitely come back in full form today. But we're talking about plenty of stocks that are in focus, and one of them is Tata Motors. Now, the Tata Group has signed a big deal, $1.6 billion electric vehicle battery plant deal. So what will happen is Agartha's Energy Solutions, which is a subsidiary of the Tata Group, has committed $1.6 billion of capex to put a plant which is a 20 gigawatt lithium-ion cell manufacturing unit in Gujarat. Now, no timelines have been shared on when this plant will come through, but the initial manufacturing capacity will be 20 gigawatts, and then the plan is it could be doubled in the second phase of expansion. So it's a huge expansion plan to localize battery manufacturing as well as to ease the supply chain constraints. Now, Morgan Stanley put out a note where they said that Tata Group's foray into battery cells should definitely help Tata Motors. It will provide a stable, secure and cost-effective supply chain, and this is critical to managing the lead in the market share space. So remember, Tata Motors currently is the market leader in the four-wheeler electric vehicle space. They have a EV market share of 86% just with two models, the Nexon EV and the Tigor EV. And now, if they want to maintain the lead in the passenger vehicle EV space, then this battery plant is something that will help them both in terms of market share as well as lower costs. Morgan Stanley maintains an overweight. They have a target price of 617. So I'm going with green on this stock.
Okay, all right, going with green on Tata Motors. But Ekta joins in to tell us about some pharma stocks. They're going to be in the news post the news flow of the weekend. Morning, Ekta.
Thanks for that. Well, yes, the interesting news is that the government has banned 14 fixed dose combinations with immediate effect. This came over the weekend. The government has mainly banned cough and cold drugs, respiratory drugs, all of the codeine-based cough syrups, and very commonly used pediatric cough syrups as well. So, for example, from a listed perspective, I expect Mankind to be in focus because Cody Star, which is a 140 crore brand for them, could be under the scanner. We have Teddy Cough, which is likely to be a part of the ban. It is a pediatric cough syrup. Glenmark's Ascoril C, they did come out with a statement. Sales of around 19 to 20 odd crores annually. That one is going to be a part of the ban. And Abbott, just watch out for that stock. A lot of private, a lot of brands within the private Abbott company have been under the scanner. There could be some impact on the listed space.
This is crazy, right? Almost all of us have used, and our children have used these cough syrups for years. And now, like Ascoril C, for example, and now the government comes out and bans them. So it's kind of a worrying situation as a parent, especially when you think about stuff like this. All right, a very important story, and we will, of course, play this through the course of the day. Ekta, thanks a lot for that. The other space that we're looking at is the auto ancillary space. There are developments on Minda Corp and Precall. So I just want to put that on board. Minda Corp, the board has approved raising of funds to the tune of 600 crores. This was already known. The approval has come through now. While Precall has, there are some shares that are purchased by the promoter group to the tune of about 1.38%. Precall Engineering Industries Private Limited has bought about 15 lakh shares, while Precall Logistics Private has bought 1.82 lakh shares. So, just an update on that takeover battle that's happening between Precall and Minda. But back to Ekta now. She's tracking some more stocks in the news. Ekta, over to you.
Well, Indico Remedies, I expect the stock to be in the red. Their Goa plant 2 has been classified as an official action indicated status by the US FDA, was inspected from the 20th to the 28th of Feb, was issued 4 observations then. IPCA Labs, there was an income tax department survey which was carried out at the company's Mumbai offices as well as their Sikkim manufacturing plant. Survey was from 30th May to 3rd June. The company said they've extended full cooperation. Expect both those stocks to be in the red, and Lupin could be in the green because they've announced the launch of an HIV drug in 600 mg and 800 mg in the US. Market size $308 million in the US. They could have 180-day exclusivity, which is basically they could be the only other player selling it besides the innovator on both these trends. So it could be an upside for Lupin.
Okay, well, Ekta, thanks very much for that. Now, Paytm is in focus. Abhishek is here to tell us why. Abhishek, morning.
Morning, Prashant. So, Paytm has given a business update for the month of May 2023. So, the loan disbursed are at 44 lakh, which is up nearly 52% YOY and about 7.3% on a month-on-month basis. The disbursements are at 5,503 crore, which is up 187% YOY and about 33.7% on a month-on-month basis. So, the gross merchandise value, that GMV that you call regularly, is up 36.6% YOY and about 8.7% on a month-on-month basis. Average MTU is up more than 24% YOY and it's flat on a month-on-month basis. So the calculation shows that the disbursements ticket size is at 12,507, which is up about 89% YOY and 24.6% on a month-on-month basis. So it looks like a good business update for the month of May coming in from Paytm. Back to you.
Okay, thanks a lot for that. Well, the big story overnight or in the last 48 hours was a very strong US jobs report that came through. But let's find out what the ramifications of this has been on the crude market. Manisha Gupta is joining in to give us the latest on that. Manisha, over to you.
Sonia, thank you for that. Well, yes, a strong U.S. jobs market and the fact that the OPEC and allies have gone ahead and cut some more output clearly has been supportive for the crude oil prices. As a knee-jerk reaction, we did see $79 a barrel as well for the Brent prices, and that's exactly where the markets are headed because Saudi Arabia has pledged additional cuts of 500,000 barrels per day to the end of 2024. For the month of July, they will be cutting output by 1 million barrels per day. And they said if required, then this can go beyond, extended beyond July as well. So we are looking at bigger cuts coming in from OPEC and allies, which remember control the 40% of world crude output. And that really has been supportive for the markets. For the month of July and August, this is also the time that you have the U.S. summer driving season beginning. So the demand is expected to be on the stronger side. This could continue to be supportive for the markets. For the week, though, it is going to be about the China trade data, the U.S. service sector that the street will keep an eye on. And there is almost a 74% probability of a rate hike pause for the month of June as well. That seems to be supporting crude prices also.
All right, thanks a lot for that, Manisha. Well, here's a quick recap of all the top stocks. Stocks with positive news flow include Tata Motors, Minda Corp, Precall, Lupin, ONGC and Paytm. While stocks with negative news flow include Glenmark Pharma, Mankind, Indico Remedies and IPCA Laboratories. Well, time to slip into a short break, but up next, we'll be joined by Prakash Thiwan. He'll be joining in for some fundamental stock analysis. And later on, we'll be joined by Mr. Rishi Sanghvi of Sanghvi Movers to talk about their business outlook. Stay with us.
A road trip in a CNG car.
Where will all the luggage go?
OMG! It's CNG! Big boot, big appeal, big reaction. OMG! It's the Altroz iCNG.
नई कार तुमने कार इंश्योरेंस खरीदा होगा एगो ऐप से नहीं
आपको
नहीं तो कोई बात नहीं मूर्ति गलतियां होती रहती हैं कोई जरूरत नहीं है चेक करने नहीं मूर्ति
नई कार खरीदने से पहले एको चेक करें और 36,000 तक बचाएं।
Keeping up with the pace of life is not easy.
to find the perfect balance. We need to savor the pause. See? It never ends.
I am slow. I'm a tortoise. But your wealth managers, they shouldn't be as slow, you know?
Choose Nuvama. We move at the right pace because we only do what's right for you and your money. Nuvama. Let's do it right.
Who said you need 4 doors for your family?
Just cut the crap, man.
The surprisingly spacious MG Comet EV, the no-nonsense car.
डायबिटीज कंट्रोल करने के लिए आपने इतने स्टेप्स उठाए।
नो थैंक्स।
तो हमने भी आपके लिए एक कदम बढ़ाया। बजाज अलियांज लाइफ इंश्योरेंस प्रेजेंट्स डायबिटिक टर्म प्लान, इंडियाज ओनली टर्म प्लान एक्सक्लूसिवली डिजाइन फॉर डायबिटिक्स। ये प्लान आपको हेल्दी लाइफस्टाइल अपनाने पर रिन्यूअल प्रीमियम्स पे रिडक्शन देता है। समझो हो गया।
Welcome back. We have market expert Prakash Diwan joining us now to talk about a whole host of stocks that are in focus. Prakash, hi, good morning. I wanted your thoughts first on the latest development in Tata Motors, where there's a huge $1.6 billion commitment from the group to set up a battery EV plant in Gujarat. Now, of course, we know that this is going to help them a lot in terms of lower costs, better supply issues, and to maintain their market share. But do you think from a stock market angle, it could result in a higher stock price, or is this something that just is the usual course of business and may not affect the stock price too much?
Good morning, Sonia. So, I think it's a very, understandable, evident development that the group is getting into, because with this kind of a dominant market share of 85-86% on EVs, there's no way they can slacken on batteries or on the charging infrastructure. In fact, I wouldn't be surprised if the next phase of announcement contains something related to the charging infrastructure from some of the group companies which have been working towards that. The advantage that Tata as a group have, Sonia, is that they have various businesses that can contribute to building the ecosystem, the EV ecosystem in their favor. Unlike, let's say, a Maruti or M&M, which are more standalone auto OEMs. So definitely this will add a lot of premiumization to the Tata stock, Tata Motors stock. While it's run up so much, you might not see it immediately, but it will always move to the next band of the multiples for sure. The other thing, look at the recent ad campaign they've unleashed, which is the CNG on the Altros. I think what it tells you is that they're trying to also get into segments which probably were dominated by just the Maruti Suzuki portfolio. So they're trying hard to make sure that they fight on all flanks very, very favorably and very strongly. So I think it's going to be positive. The stock might not, today's excitement would probably be sentimental, but all of this takes time. It tells you the direction in which the stock, the company is moving, and hence the stock, as I said, will probably be available at superior multiples that probably just a Maruti enjoyed all this while. So yeah, it's interesting. The battle is hotting up for EVs, and it's good to see the progress. As consumers, we'll definitely benefit. Tata Motors leading the way will also see some sort of a resilience on its stock price. It won't come down as easily, but it won't go up right now just because of this.
Okay, Prakash, hi, good morning. Just a couple of names. Cyient was the big mover last week, and actually all of this year so far, 80%. Any thoughts on this one after the run-up? By the way, Rima was telling us on Friday that valuations are still on FY25 basis, still 20 times. Yeah. So they're not outrageous. That is one. And if you can comment on Paytm, there is a business update. The CLSA has put out a report. I mean, just looking at their business model and how Paytm makes money and how they will make money in the future. Any thoughts?
So let me take the Paytm question first, Prashant, because that's more relevant to a lot of investors who, and this is a highly debatable stock in that sense. Paytm's metrics that have been announced tell you that the business model is finally evolved to a path of profitability, which was not the case, let's say, when it IPO'd, right? So what it's telling you is that the merchant establishment revenue, the disbursement of loans, which is apart from the fact that it was just a money transfer platform, is suddenly started kind of looking at some sort of revenue generation potential. Now, whether you get excited at this particular quarter or this particular update is a very personal thing, but I would wait for it to be a slightly more deep-seated trend, before you start putting those kind of valuations out. But it's interesting that the company's evolved itself so rapidly, given feedback from the market, from analysts, and the kind of disappointment that they have responded to. It's just quite nice. But you will have to, for numbers to speak there for themselves, you'll have to wait for at least a couple of more quarters, is what I feel, Prashant. But it definitely started looking interesting, worth tracking closely. On Cyient, my view has been very positive right from the time we saw, build up in the aerospace vertical globally, the kind of, sales that were happening on aircrafts, the kind of routes that were getting added. I mean, all of that always helps when a niche area starts kind of, expanding. And Cyient has worked very rapidly to take advantage of that. And what's interesting now is that the new management, they've had a little bit of a churn on the top management there. They've elevated one of the CXO level, resources to head the company, which is continuity. It's assured. And the visibility of earnings which came through from the con call in terms of what all they've done and the kind of new clients that they're adding is very interesting. So I think, yes, as you said, the valuations are not very stretched at all compared to some of the more niche mid-cap IT names which have enjoyed, the likes of KPIT, Tata, LXC and all. I mean, I'm not saying they're on the same boat, but we've seen how premium valuations can drive things. So here is a company which has very robust visibility, decent margins, and the margins would improve. Operating leverage is coming and still available at a low. So I would believe it still has more legs to go, though we've seen a very sharp run up in the last 12 months. But then if you're holding it, you probably have much more to celebrate for at least the next 15-20% easy from here.
All right, Prakash, request you to stay with us and listen into the next conversation that we're going to have. Let's invite our first corporate on the show. Remember, in the past week, we got a lot of positive sounds coming out of companies like Inox Wind as well as Suzlon with regard to the wind power energy sector. Now, to erect, some of that, you'll require a crane. So we're inviting the next guest is from Sanghi Movers, Mr. Rishi Sanghi, the managing director at Sanghi Movers, who joins us on the show. Hi, Rishi. Good morning. Thanks so much for joining in. Well, to erect a turbine, you require, what you lease out. That's a crane. Could you tell us, from the wind sector itself, are you seeing incremental demand that's coming in there? As per your presentation, as of the last year, close to around 44% of your business came in from the wind sector. Is this number likely to move up?
Good morning, Nigel. Thanks for having me. So there is a lot of traction in the wind industry, and capacity addition in the country is going to double in this financial year. So we're going to see anywhere between 4.5 to 5 gigawatts of capacity addition in the wind sector. Having said that, we do see our exposure to the wind industry increasing. And I would say that this is a positive trend, given that the Indian government's target of 140 megawatts of wind energy by 2030.
Rishi, hi, good morning, and thanks for joining in. I want to understand what the yields for the company could look like over the next, say, 2 to 3 years. I was going through the conference call that you put out, and in that, a very pertinent question was asked about when the yields would get back to those 2.6 to 2.7 kind of levels that I think you used to enjoy a couple of years ago. Is this a level that perhaps you can achieve over the next 2 to 3 years, given that there is so much traction in this space now and you're sitting on a good order book?
So we expect yields to be around 2%. What we have done is improved our operating levers. So our EBITDA is going up. And that is really what has resulted in us declaring a historic profit last year. So yields will be around 2% for the next financial year.
Rishi, hi, good morning. In terms of receivables from some of these, wind EPC companies, anything, is there a problem or is it very smooth out there?
So, hi, good morning. So our receivables from wind companies are on track. They are paying us within the payment dates. I would say that for wind projects, most of the IPPs have project-based financing. So they don't start the construction of the wind farm until the entire financing for the project is secured up till commissioning. So for us, liquidity is not a concern from wind and EPC companies.
All right. You know, Rishi, you have laid out that you want to do a capex of close to 260 crores for the entire of this year. But I understand in the first couple of months itself, you're clocking close to around 200 crores or thereabouts. Do you want to up this capex spend for this year? And also, if you could tell us, how do you intend on funding it?
So our capex plan for this year is at 264 crores. And this has been approved by the board. And as you rightly mentioned, 200 crores has already been brought online. This capex will start adding revenues in the last 3 quarters of the financial year. All our capex is backed by long-term orders. And the management may consider increasing the capex by another 100 to 125 crores, subject to board approval and the demand from the market.
Okay, so this 100 to 125 crores of incremental capex, will that put any pressure on your debt? I mean, you've done some phenomenal work in reducing your debt over the last many years. It's gone down from about 550, 600 crores, and now I think you're sitting on just about 160 crores. But given that you are putting in some capex to work, would this mean some pressure on your debt? And what's the level that you're comfortable with by the end of the year?
So we are an asset-heavy company, and capex is required to fund incremental growth. So as you mentioned, yes, we have brought down the debt to 0.19, and this is effectively we are a debt-free company. That's why the company has decided to add about 260 crores of capex. I think adding another 100 to 125 crores of debt, subject to board approval and market demand, will not put a lot of pressure on our margins. We fund our capex through long-term debt financing, of which 30% is our margin. And the existing businesses generate sufficient cash flows to reduce the debt as we have in the past.
Okay. Rishi, you just have you look at your stock price, which has done very, very well. And it's basically climbed back above the previous all-time high, which was back in 2015. So after many years, it's come back, above that level. I was looking at, results over the last many years. I mean, going back 5, 6, 7 years, there were pretty rough patches as well. You were in the red as well at one point. I mean, and there has been a very sharp pickup, of course, in FY23. Is it all looking very good from here out? I mean, is there visibility for the next 3, 4, 5 years as you see it? I mean, your order book is about 300 crores, but beyond that, and that's most of it is executable in FY24, but beyond that, how is visibility looking briefly?
Absolutely. So, I'm proud to say that the company has never made an operational loss. We have a very high depreciation, and so we have extremely good cash profits. But having said that, I do believe that it is India's decade, and the infrastructure growth story is one that is extremely strong. For example, there is almost going to be 200 million tons of new capacity addition. And this is evident through the massive capex upcycle that we're witnessing across all sectors. So petrochemical refineries will add about 80 million tons per annum, thermal power 25 gigawatts, wind power 5 gigawatts, steel 13 gigawatts, cement another 80 million tons, which I might say is at a 10-year high for capacity addition. So all of this capacity addition, along with metros, railways, bridges, ports being built around the country, is going to have a significant increase for the demand of cranes. And going forward, we have a very strong order visibility, where some of our order book is reaching out into FY24-25 as well. So I do believe that the capex upswing will create a very strong demand, and it's a very good growth story for the company.
Okay, very quickly, Rishi, you gave us the yield. Utilization is the other important factor. What kind of utilization levels are you looking at for this year? And also, just a quick question, will you look to tap the equity market since the stock price has gone up by such a large extent?
So our utilization levels will touch between 82 to 85%. which for our asset owning company is an effective utilization of around 95 to 100%. Tapping the equity markets is something that we have not considered, but if the opportunity arises, we'll take it to the board and get feedback from them.
Okay, all right. So when the opportunity arises, you'll take a look at it. One quick question, in the quarter gone by and in the year gone by, actually, your freight costs, manpower costs had gone up significantly. So that put a little bit of pressure on your operational performance. Do you see that cool off in the quarters to come?
So we have done a lot of, as we mentioned, we've done about 200 crores of capex. So bringing that capex online does have an impact on our margins. But towards the end of the year, we do believe that we will be able to maintain a similar EBITDA margin as last year.
Got it, Rishi. We'll leave it there. Thank you very much for your time. Good speaking with you, and appreciate you joining in right now. We'll take a quick break. Anuj will be with us in our studios in just a bit, and of course our technical experts as well. Stay tuned.
CNG is good, but to get something, you have to give up something.
OMG! It's CNG! Big boot, big appeal, big reaction. OMG! It's the Altroz iCNG.
That's the boss's cabin. The canteen is behind. Morning, ma'am. Morning. And you are here. Good morning. Good morning.
मैम और कोई ऑप्शंस
लाइफ में और कहीं ऑप्शंस मिले ना मिले, मोतीलाल ओसवाल आपको देता है ऑप्शंस ट्रेडिंग में ऑप्शंस। इंट्रोड्यूसिंग मोतीलाल ओसवाल ऑप्शन स्टोर विद अ वाइड रेंज ऑफ ऑप्शंस इन ऑप्शंस ट्रेडिंग। एक्सप्लोर करो ऑप्शन स्टोर। Investment in securities market is subject to market risks. Read all the related documents carefully before investing.
What does your investment portfolio look like without gold? Incomplete. Because as a gold owner, you have the power to make bold decisions. To balance risks and returns. The power to buy and sell. Right at your fingertips. Making gold your strategic advantage.
Without which, your portfolio is incomplete.
Power your portfolio with gold. World Gold Council.
Keeping up with the pace of life is not easy. To find the perfect balance, we need to savor the pause. See? It never ends.
इंश्योरेंस कोई आरओआई नहीं है। एमएफ ईयर चेक कर, हाई होगा। क्या है?
आप बीपी चेक कीजिए, हाई होगा। हाई बीपी से सीकेडी हो सकता है और उसके ट्रीटमेंट से आपका टोटल लाइफ सेविंग्स खत्म। एसएचआई ले लो।
एसएचआई
स्टार हेल्थ इंश्योरेंस। अपनी सेविंग्स को बचाइए स्टार हेल्थ इंश्योरेंस के साथ। द हेल्थ इंश्योरेंस स्पेशलिस्ट।
Okay, welcome back. SGX is up on your screen, almost 100 points higher, 18,724. Anuj is here in the studios with a quick check on how he's seeing things. Anuj, hi, morning.
Morning, Prashant. Well, we have had 3 days of back-to-back range trading in the market, and today it looks like we have a gap up. My sense is while the US market surged overnight, those are more US-specific cues, and actually cues on balance for India actually are negative. I mean, if you look at dollar index, you look at bond yields, and you look at crude, all have gone up actually. So in some sense, maybe it's a bit negative. Of course, the big cue this week is the RBI policy, which comes on Thursday and is also the expiry day. So let's see how the market moves. Of course, it's been quite strong, the market at lower levels has been, also getting some support. But close to all-time highs, there's going to be some resistance. I think trade for today is to be in IT stocks and largely mid-cap IT stocks. That's the pocket which is likely to do really well today. In fact, even on the Nifty, my view is that today, the Nifty IT and Nifty Bank may move differently. The IT index may outperform and Bank Nifty may slightly underperform in today's trade. In terms of levels, the resistance is at 18,650 to 18,700. It looks like we opened there. And the big resistance is 18,700 to 18,800. The support zone lies in lower at 18,450 to 18,500, which is where the market's taken a lot of support over the last few days. On the Bank Nifty, as I said, this 44,000, 44,500 is repeatedly acting as a big resistance, and the supply zones and support zones will come for you But my base case, as I said today, is that perhaps Bank Nifty underperforms and IT does well, especially the mid-cap IT.
Oh, that's interesting. Thanks a lot, Anuj, for that. So perhaps the IT sector could come back in a big way and Bank Nifty could underperform. Let's do one thing. Let us also move to the macros as the GDP for the fourth quarter sprung a pleasant surprise. GDP forecasts have been upgraded for FY24 and the president of the CII, R. Dinesh, believes that India can grow at 7.5% in this financial year. Shireen caught up with the newly appointed head of the industry body to discuss the Indian economy and expectations from the RBI policy. Listen into what they had to say.
If you look at the various opportunities which are happening from the global economy, I think all of it play to our favor. Finally, I think the way in which this government has done the transformational reforms, I think has attracted interest from all over the world. Wherever we have been meeting investors or potential investors into India, we have heard great interest in looking at this. And that's what gives us the confidence that we can hit this rate of growth. We are definitely saying that we want the pause to continue, but the stance to, as you said, to change from hawkish to neutral, and that, of course, that is more helping the perception of what the future is going to be. And I think the RBI governor, when we recently met, was very clear in saying that he is obviously not the deciding person, but what happens at the ground level, especially with inflation, is going to be the important factor. I think from CII's perspective, we do understand and we believe that inflation has to be kept in check. And right now, we see all the right signals coming from, not just from the market, but also from our survey, which we did with our CEOs. But having said that, the target he has set for himself is 4.5%. And therefore, we have to wait and watch and see by October that it comes to that level or below that level. Then we can look at a reduction in interest.
All right, Prakash Diban is still with us. Prakash, thanks for waiting by. Prakash, I wanted to ask you on a couple of stocks that we have discussed many times in the last many years. Precall as well as Minda Corp. Minda Corp is looking to raise some money. Maybe they want to shore up money to go ahead and get a bigger chunk in Precall. And Precall's promoters, they're showing the faith now. They've gone and crept and bought some shares from the open market. Precall's already close to have doubled in the last 1 year. How do you approach these stocks from here on?
So, Nigel, this is a classic corporate, acquisition battle of sorts. Both parties are not willing to bow down, lower their stance in terms of what their intention is. Minda has, of course, been very clear now that they're raising this money with the intent that they would want to kind of acquire a significant stake in the acquisition target. Whereas Precall probably is, trying to race up for a battle, and which means that they'll only make things difficult for the acquirer. So it's not going to be very easy for either of them to kind of give in. But at some point, as I said earlier, Precall is the one that's being targeted, and which means that there will be a lot of battle around that, and hence the price will probably see some sort of an appreciation. And from that stage itself, we've seen a significant move. But there's still much more to go in this battle. I don't think it's going to be very easy for either of them, as I said. But Precall seems to be poised for a re-rating, given its importance to not just Minda Corp, but to the entire ecosystem where it fits in. So Minda will definitely pay top dollar for this, is sure. And Precall would probably attain at least another 25% of an upside, approximately. I'm just making some very rough estimates on what Minda would make, what makes sense for Minda to pay for this acquisition to be consummated. So yeah, something on the lines of 275, 280 is where it could head very easily if Minda were to take this in its fold.
Okay, I also want your thoughts on Paytm, because the business update that has come through for the month of May looks very good. It's almost a 52% growth that we've seen in loans disbursed. So I will come to that in a bit. For now, let me just go across to Sudarshan Sukhani and Shrikant Chauhan and get some updates on how the market is shaped up. Sudarshan, hi, good morning, and Shrikant, morning to you as well. Do you reckon, Sudarshan, that given that we have very strong cues from across the global market, the SGX is up 100 points, is there more scope for the market to perhaps break out of its range this week?
Yeah, good morning, Sonia. See, the opening should be above the resistance levels of 600, 650, and the chances are that we may make new highs. So after all, we are in an uptrend. All we are seeing is a process of consolidation in between that uptrend, which is natural. So the trade today remains to be a buyer, except that you don't really run after the gap. You buy on an intraday dip of about 75 to 100 points. Almost every day these dips are available. then keep a stop under 18,450 and stay long. We cannot question the market. It's going up. We want to be with it. Now the Bank Nifty, as Anuj was also saying, may be an underperformer. So it's a better idea to focus on the Nifty.
All right. Gentlemen, good morning. Shrikant, how are you looking at things?
Good morning, Prashant. Yeah, I do agree with Mr. Sudarshan, because the reason is that the market is consistently finding support at lower levels, but at the same time, it is failing to cross the level of 18,670, which is crucial for the market to cross. If we see the market is crossing 18,670, then the chances of hitting 18,900 would turn very high. But till then, we are going to see range-bound sort of activity, and below 18,450 only, we can expect weakness. So the strategy should be to look for adding some position if there is any correction, but at higher levels, it is better to avoid chasing index. It is better to be more on the stock side.
All right.
Okay. All right. So Shrikant, let's get straight to your stocks then. What do you have for us today?
Yeah, I think like Reliance has not participated in the current up move. So we can expect some activity in Reliance Industries. It is also very close to its important support area. And in last 15-20 days, whenever the stock has fallen to 2450, 2460, we saw some rebound. Today also, we are expecting some activity in Reliance Industries from current levels. It can again go to the levels of 2500 or maybe 2520. So it's a buy at current levels around 2455, 2460 with a stop loss at 2420. And the other stock which we like is JSW Steel. And the reason is because all these metal stocks, they did well on Friday, and most of them recovered from their lower levels. And in fact, they are forming some higher bottom. So JSW Steel is looking really strong, and it is in fact outperforming in the current space. Here we are expecting 730, 740 sort of levels. With a stop loss at 690, we should be buying JSW Steel.
All right. Thanks a lot for that, Shrikant. What about you, Sudarshan? What would your calls be for the day?
Well, we start with Maruti. Maruti is a buying opportunity. It had a good day on Friday, and it's in a strong uptrend. Buy with a stop under 9,300. L&T has not been participant in this rally, but it's now making a trading range, and it could be a late comer. So consider buying L&T at with a stop under 2,200. Concor is my only intraday short. This stock has given a sense that it may be entering a correction. You don't have to go short unless you see some weakness there. But if you do see a weakness, intraday short with a stop above 676. And finally, NMDC is a buy. It had a nice small range. It broke out of that range on Friday. Buy with a stop under 106.
All right. We'll leave it at that. Thanks a lot. So those are some cues to